And we can get into this thing, this big debate about gold to Bitcoin and all that a little bit later, because as I said, some people seem to think that like you can put everything in one pot, which we know that if you do put everything in one pot, like now, if that was all into, as I said, cryptocurrency or the stocks and shares, you're kind of like, you're in trouble, basically, if you need to exit quick, isn't it?
Definitely.
Some people like, and how do you know when it's going to come back up again? It could take a while.
Yeah.
The thing with gold, having that savings pot there is not for the greedy. If you know what I'm saying. Your money over short periods of time is not going to go up massively, but at the same time, it's not going to go down massively as well. So that's why I said today's like a good time to have this video. While everything is crashing, stock markets, cryptocurrency and everything, gold is still there, just stable, not really doing much. But it's the type of thing that you look at and you don't really see it jumping up too much. That's why people don't really pay attention. But it's like a slow creeper. It slowly creeps up over years, if you know what I'm saying. So yeah, so that was the first one. The second one I wanted to talk about. Have you got any questions about that one? About the history of money?
No. It was interesting what you were saying now. But it's like going back to the previous video, the way I see gold is like a store of wealth rather than a growth investment.
Yeah, definitely.
You know what I mean? So yeah, make your money in Bitcoin or whatever it is you choose to do. But then when you've got your profits there, definitely take some of that and get some precious metals.
But what happens though? We get greedy. We don't want to store it. We want to think, oh, I made £1,000 profit instead of putting £500 into gold and banking it. Yeah. You're thinking, nah, that's not gonna make me another £1,000 or whatever. So they go and put it in again, and you might be all right like that, and it can work if you hodl over longer periods of time in crypto and thing. It can work. Sorry, putting that straight back in again, but the problem is, if you need that money in emergency times, you are fucked, basically. Yeah. Because you could buy at the wrong time. As I said, I'll give you an example with Ethereum. If you brought one only like about a couple of weeks ago to a month ago, and you paid 2,800 for it, and it does happen, people don't admit this, but say you had to exit because something might have happened, you need the extra money. Now you've got to go and sell that. You're going to get about £1,750 back. You've lost £1,000 straight away. If you bought an ounce of gold, even if you've done that in a short space of time, you probably would only lose about £100. So which is safer? Exactly. So one is good for invest, is more of a risky thing, but it's good for investments, which I'll say crypto, stocks and shares, like I said in the other video. The other one, that's a slow burner, that isn't necessarily to be seen as a growth investment. It should be seen as real money, is the gold. And then, as I said, you got that little safety net. How much you choose to put in to your safety net in your savings pot is up to you. Some people don't have nothing. It's strictly just all into the investments pot, which I think is very risky. I'll say that again and again, because I think that's definitely the wrong move. And I've been so close to it myself, of having to like dip into my investment pot. Who wants to go and dip into the investment pot at a loss? No one. Exactly. You want to be selling that when you want to sell it. Yeah. Because you're in profit, isn't it? 100%. So that's that.